Hello and welcome from Buenos Aires, Argentina to this episode of Crossing Borders with Nathan Lustig, where Nate has conversations with entrepreneurs doing business across borders and the people who support them, with a focus on those that have some connection to Latin America. My name is Josefina Dominguez and I am an editor for Latimlist, a proud sponsor of the Crossing Borders podcast. Sign up for our weekly updates on latimlist.com to get a summary of the week's biggest headlines in Latin American tech news. Nate's guest today is Martin Schrimpff, co-founder of Zinobe, the leading online lender for the Colombian market that has placed over 1.2 million loans. They talk about Martin's experience growing up in Colombia and the culture shocks, but also the similarities he sees in Mexico, where he currently lives. They also discuss product financing and how the roles were reversed when they acquired a company which had initially tried to acquire them. He also gives advice to angel investors and talks about his new fintech startup, Centeo. We hope you enjoy this conversation with Martin Schrimpff.
Hey, Martin, welcome to the podcast. Thanks for being willing to do it.
Thanks, Nathan. Thanks for the invite and excited to be part of it.
Where are you in the world today?
So I'm in Mexico. I'm actually about an hour and a half away from Mexico City. That's where we've been doing our quarantine with the family. I have 3 young kids, and if I didn't give them a bit of space in the garden, I think they would have driven me crazy. So, but anyhow, very much, it's a very nice small town on the outskirts of Mexico City.
Nice. And where are you from originally?
So I'm Colombian with a British mother and German father, but lived all my life in Colombia until about 17. And then I went to uni, I finished school and did uni in the UK.
This is going to be a good story, which we'll dig into more in a minute here. But I want to ask you first, what are you working on today?
So we are now in the midst of launching a fintech in Mexico. We started about 7 weeks ago, and it's a fintech focused on the SMB space. So we're lending to SMBs, specifically on what we call vendor finance. So we go to companies like Cemex or Wholesome. We do partnerships with them and then give financing to the end clients for those end clients to buy more products of our partners. So think of it as an enhanced, like a credit card or payment method done with credit to purchase to other companies, specifically on the SMB space.
Very cool. And we'll go deeper into it in a minute or two here. But I want to go back to your story. So tell me a little more about your background. How did you end up in Colombia and then now Mexico?
Yeah, so I think my German grandfather decided to settle in Colombia after the Second World War. And then my mother is an archaeologist, so she decided to go and live in Colombia and explore Colombia. And that's the reason I was brought up in Colombia. So we're 3 brothers. We all went to a German school in Colombia. And that's basically how I ended up there.
And did you know that you always wanted to be an entrepreneur? Or was this something that came up in your business career?
No, for sure. My father was an entrepreneur. He was a photographer and he had his own small business. But I think that always kind of set my mind that I wanted to do my own thing. So I did absolutely everything I could, from starting small little casinos at the school or selling chocolates at school. So it was always in the back of my mind. And so then when I finished university at Edinburgh, one of my close school friends from Colombia said, "Hey, look, I'm really keen on setting this up." And I jumped at the opportunity. So I moved back to Colombia and we set up our first software development company called Sirius.
And when you had grown up in Colombia and then you go to Edinburgh for school and then back to Colombia, were there any culture shocks or big differences that you had to navigate?
No, for sure. I think it's always tough sometimes going back, specific culture shocks. I mean, in general, punctuality on meetings and the way things are done in Latin America are more folklorico, as they would say. And so that's sometimes hard to get back and get used to and understand that you just have to do it. But I even had culture shocks going from Colombia to Mexico, right? Because it's just like a yes in Mexico doesn't really mean yes, it's a deal. It's like maybe, and those are things that it takes you a long time to kind of start learning.
A lot of Mexican entrepreneurs will say that Colombia is probably the closest culturally to Mexico. Do you think that's true, or have you seen more differences coming from the Colombia side into Mexico?
No, I think it is. I think we connect a lot. Colombians and Mexicans have very similar mindsets and a lot of things. I mean, Colombians love mariachis probably more than Mexicans like mariachis. The food and just even, El Chavo and a lot of the things, Cantinflas. I mean, Colombians probably watched it more than the actual Mexicans. I think there are a lot of similarities, but there's also differences in like work culture and work, just in general work culture. But I would say they're probably the more similar out of Latin America. Yeah.
So when you started your first business, how did it go?
Good. I mean, the first business was more of we started doing web design, web development. It's one of those things that we started it because my brother had a business in the UK, and we thought that, immediately he was going to send us work for you could do outsourcing. And so we started it with that hope. But then I got to Colombia, we set up shop in my friend's living room, and my brother never sent us a bit of work. So we're like, okay, this business is not working. But then I just, I flew back to the UK. I started getting contacts on whichever way I could on other companies and software developers. And that's how we got our first clients. And then after that, it took off quite nicely. It was never going to be a massive business. It's not a kind of a scalable business in that, but it was the ground. Sirius was the grounds for us to launch Payu, because Payu required a lot of capital. And so basically Sirius financed that company, which is, the PayPal for emerging markets at that stage. And there were no VCs, there were no way of getting capital. This was back in 2002, right? So yeah, I think without Sirius, Payu wouldn't have survived.
Having a cash flow business, especially a dev shop, is kind of like the dream of a lot of entrepreneurs who are building dev shops, and being able to spin out either a product or a brand new company that is more scalable than a services business. Do you have any advice for people who maybe are in that situation or are thinking of trying to build out a product after having a services business for a long time?
Yeah, I think it's you're right. I've met a lot that have a services business and are always trying to think of the product. Look, I think the big point where I see a lot of them fail is they start with the product, but then get disheartened or get dragged back into the service thing, because the product is going to take a long time to get off the ground. So we've done it twice with Sirius. Okay, we did it with Payu, that I'll give you all the details, but it became like a multi-million-dollar company, and we ended up selling more than 300 million, valuation over $1 billion, and more than 2,000 employees. And I also did it with another company which is called Centeo, and Sirius again was funding that company. And just the example of both Payu and Accendo is that it took us probably like 5 years in each of them to get to a reasonable size and profitability, to then get kind of serious investment. The last 3 years have been completely different in Latin America than what I was used to. I mean, money was flowing all around, and you could get your startup valuations of 5-10 million. But this didn't exist 10 years ago, and it might not exist again after this pandemic, right? So I think it's a really nice way of doing it. If there are not many VCs further down the line, and you have to self-fund, it's a very clever way of doing it. Have your service company fund your product, and I think the main advice would be just believe in the product that you're doing the research of the product, but believe in the product you're doing and stick to it. It'll take a while before you find that product market fit.
Yeah, that's really good advice. And even just to follow on that, even if there are VCs around, sometimes it's better to just be able to control your own destiny. If you're funding yourself, you don't have to report to a third party, because some VCs are great, others are not. Sometimes interests are not aligned, and if you can control your own destiny, probably even better.
Completely. And then you can really choose the VC that you want to work with too, if that's the case. You're not desperate for cash. That's the only way of surviving or paying yourself a salary. I mean, Sirius was paying our salaries and supporting our lifestyle. We didn't, me and Jose Vélez, who were the founders of Payu, and there's a third one, also Santiago Spinel. We didn't come from rich families or, parents that could support us or start putting money into the company. So it was the only way for us to really get these companies off the ground. So there's different ways. We don't just have to rely on closing Series A, Series B, and doing it that way, right?
So when you have the cash flowing business, how did you pick the idea? You could have picked any other idea in the world, but you picked Payu. Why that one?
It was the most ridiculous thing in the world, but we just saw PayPal getting bought for $1.5 billion. We thought, well, that's interesting. Why can't we do the same? And we're completely naive. I mean, we're like 24, 25-year-olds, had no clue about, the market size, that Colombia had no e-commerce whatsoever. And we just thought, yeah, they did it, we can do it. So it was naiveness. I think if I had the experience I had now, I probably wouldn't have started it and I wouldn't have pushed at it. But sometimes that naiveness gets you to do things that you wouldn't do, right? I mean, it's exactly the case. Had we done a proper market research, proper business plan, we wouldn't have done it either. So that was the reason. We just saw a business model that, we thought was interesting. There was a need to, I mean, Santiago Spinel was one of the big sales guys in Derremate, which was like the competitor to Mercado Libre in those days. And he had no ways of receiving payments. And so he came to us, he told us about this PayPal. I said, let's set up the PayPal for Latin America. And so then we partnered up with Derremate. They got very enthusiastic, and that was the reason we started doing that product.
So walk me through the first couple of milestones of getting the company off the ground. What did you guys do to get it going?
So it took us about a year first to develop and do all the integrations with the credit card like acquirers, and get the platform in place. And then we went out to the market and then saw that, there was no one really selling online. It was just a very small market. Our first client was some guy that was selling emeralds online. You can imagine that. And he signed up, and after 6 months, he hadn't sold one emerald, which was probably a good thing because otherwise it would probably been fraud. But we started growing with a lot of the kind of individual clients of Derremate, which again is like a Mercado Libre in those days, until we got one client that suddenly started selling dramatically. He was selling clothes to the US, and we're like, wow, this is super exciting. And 3 or 4 months down the line, after we saw these sales go like mad, we discovered it was all fraud. And so we had our first big shock. So after probably a year and a half or two of, not earning a salary of this and putting a lot of effort, we got a fraud of, it was like $17,000, which doesn't sound much now, but for us at that moment, it was, I mean, we thought it was the end of the world. And so that was a big, big blow. And that was a moment of, everyone saying, close the company. Santiago decided to leave the company. He's like, so we took on, Jose and I decided to take on all his shares and all the risk, or a lot of the shares. And it was a really important part of the moment in the company, because that was either make or break. If we closed, well, that was it. But if we were going to continue, we had to really understand how to control fraud. And as we kind of hit that pain point, I think that was the big differentiator that really made us grow like mad after that, because we became the first ones to really understand how to control fraud. We created the anti-fraud module. And after that, we started closing a lot bigger clients. We got into the airlines, and the company just became a different company. It took us like 7 years to get $1 million in revenue, which is, I know it's a joke, but it took us that time. And then it took us another 7 years probably to take it from $1 million to $300 million in revenue. But that was, of course, with a lot of investment. That's when Naspers came in, and then it became a different beast. But I think those first 7 years were just as important, or more so than those hyper growth, because we got everything in place to be able to do it.
Talk a little bit about the decision to raise money after having financed it yourself, and how that changed the company going forward.
Yeah, so again, we were super naive. We didn't even know that investment, and we could look outside of Colombia to try and get investment. So what actually happened was, like in 2008, an Argentinian company called Dinero Mail approached us and said, hey, we've just raised $10 million. They were in a similar space, but just doing it in Argentina. And they'd already, I think, with that money expanded to Mexico, and they were taking over Latin America. And we were the biggest in Colombia by far, but we hadn't even thought of, being more aggressive. So they'd raised all this money, and they basically acquired us. And, we did a deal, which was, pretty poor. We ended up like with 8% of that new company. That's the reason I came to Mexico, and I was a country manager, and I met my wife. But being in Mexico, after like 3 months, the deal didn't end up happening because they didn't actually get the money they said they were going to get. So the deal fell through. So it all reversed. So after them nearly acquiring us, I went back to Colombia, but with a complete different mindset. And so I really focused on raising money. We looked at different VCs. We were very close to closing with one. And then eventually Naspers came in it was actually Buscapé that Naspers had invested in. And they invested in us, and it completely changed. But by then our mentality was super aggressive, to the point that a year and a half later, we ended up acquiring Dinero Mail. So complete role reversal of a company that nearly acquired us. We ended up acquiring them.
That's a really fun story. And thinking about going from Colombia to Mexico and then to other countries, once you had this mentality change, how did you do it and what happened?
So do you mean the expansion of Payu as such?
Yeah, expanding Payu outside of
Yeah.
Colombia and Mexico.
But by then it was like we knew that we wanted to target global merchants. So we set up operations in Brazil, Argentina, all Latin America. Naspers had payments properties in Eastern Europe and India and Russia. So then I became like, we started creating this kind of global platform. And I became like, I set up teams in San Francisco and in Amsterdam to go after the global merchants. So big part of Payu's growth was closing like Facebook, Microsoft, Uber, Airbnb, and Google, a lot of those. And that really did a big differentiator, or that became a big differentiator in Payu. So yes, in the initial years, I was in charge of just setting up operations in each of the markets, connecting to the local payment methods. And then the final years was more global sales and getting the global sales team up and running.
And how did you decide it was time to start your next thing?
So actually, what happened was it was kind of in parallel. In 2012 or 2011, actually, I met Tarek, who's my co-founder, and he's the CEO of Zinobe. And we got on really, really well, became very close friends, and we decided to set up Zinobe. But he was the one who's basically operational. I was like more like an angel investor at that point. And Tarek just did an amazing job. I mean, he just created a fantastic company, hired amazing people. And so in 2017, I was a bit kind of getting a bit bored of global politics. I mean, when you get the company of 2000, by then there was the global CEO of Payu. So I decided to quit and join Tarek. And it's been just an amazing ride. So I can give you a bit more information about Zinobe, but Zinobe is now the leading fintech in Colombia. We're like 120 employees. We raised money with QED, which is a fantastic fintech VC investor, and we just I've gone from the payment side to the credit side, and that's another thing that's really excited me.
Yeah, talk a little bit about Zinobe. What does it do, and what did you learn from your Payu experience that helped you build Zinobe?
Yeah, so in all honesty, I can't take too much credit on Zinobe because it was all really Tarek building an amazing team. But one thing that I can say that I saw is like, I think Tarek had the opportunity or the vision of really hiring amazing people. And I think in general, the top management that we got in Zinobe was just probably just a notch higher, that we just lack of experience. So we got people with more experience in the right industries coming on board. And I think that helped a lot. The team there is just awesome. And I think I'm seeing that now replicating it. We're doing the same with Centeo, which is a new company that I can tell you about it a bit more, but it's basically a joint venture between Zinobe and Mexarent, which is a Mexican entity. As we're building the team here, we're very focused on getting just the best people. But Zinobe, just to give you a background, we do consumer lending and SMB lending in Colombia. We've placed about 1.2 million loans. We do 100% online credit for the consumers. And being in that position and having created that platform has been very interesting, because balance sheet lenders now, as you know, are probably suffering a bit from the coronavirus and what's going on. But we're in a very privileged situation, because even though maybe our portfolio was reduced a bit and we're not opening up so much to new clients, the Colombian government approached us, and we were like probably the first fintech in all of Latin America to be doing a partnership with the Colombian government. So we're giving now loans to up to 4 million self-employed people in Colombia. And we developed the product as the Colombian government wanted it. We're finding the finance for it. Colombian is giving guarantees to be able to do that. So we're giving loans for up to 12 months of about $1,500 to a lot of these self-employed independents, what they call them. That's probably been the biggest thing in the last few months, and it's amazing to see that a fintech can really now work with a government and move so much faster than traditionally the governments are trying to deploy a lot of this money through banks, But now they're seeing the power of fintechs. And I think fintechs are going to, if we can take this opportunity a bit further, even in other countries and other regions, other fintechs, I think they're gonna thrive from this.
Talk a little bit about the business you're starting in Mexico. That sounds like it's pretty related.
Yeah, exactly. So I think because of the technology that Zinobe had, we were approached by Colony Capital, which is a very big private equity. And one of the portfolio companies is a company called Ocuformas or Mexarent, and they wanted to get into the fintech space in Mexico. So that's how Centeo was born. So Centeo is pretty much in stealth mode at the moment. We haven't done much press around it, but it's going to be focused on SMB lending. And we're super excited because I think we're coming in, we're super well funded. We've got lines of access of credit to up to $100 million, thanks to Mexarent. And so we're coming in at a stage where the banks are probably very concerned about their portfolio and about tightening their credit rules. And even, other fintechs are probably, a bit more in pain and suffering from their portfolio. So we come in without having given out our first loan in a space where I think it's much needed. So I think, I think the opportunity is massive. We're very bullish about it. And if we do things right, I think not only can we help Mexico as a country dramatically, but we could be getting clients that previously we wouldn't have been able to even have seen.
No, that's really cool. And it's definitely a huge market that needs to be addressed. The lack of capital to SMEs in LATAM is massive.
Yeah, no, for sure. So we're basically using all the infrastructure of and technology of Zinobe, and then also a lot of the expertise of this Mexarent to get this going. So it's very much an initial stage. We haven't given out our first loan. We're just finalizing things and adapting the platform. But we hope that in the next month, we'll be giving out our first loans.
So switching gears a little bit, you've also done some angel investing in the region, and entrepreneurs turning angel investors is one of the things that we think is super important for LATAM. If you look at other regions in the world, it's one of the driving forces to get startups off the ground and an important part of the ecosystem. So talk a little bit about why you decided to angel invest and some of the lessons you've learned as an angel investor.
Yeah, I think it's more of a passion than anything. I'm passionate about entrepreneurship. I'm passionate about helping other entrepreneurs get off the ground and building their businesses. And I think it started all from that part. I mean, we'd incubated a few businesses before, but then the certain amount you can't just keep on incubating. So the next step was really to start looking at angel investment. So I've done about 20 angel investments over the last couple of years, probably. And I think, I think you hit the nail on the head there, Nathan. It's really interesting when entrepreneurs become angel investors, because I think what they can give back, apart from the capital, is all that operational experience and experience on dealing with future rounds, intros to VCs. There's so much that a good angel can give back, and I hope I classify myself as a good angel. That it's key. And I think if you're a startup and you're looking to grow the company, you might have access to direct VCs. Having good angels can be very, very powerful. And I've seen it also even in Zinobe. We got an amazing angel called Stephen Wolkier, who's someone from London, and he's helped in lots of things and lots of advice in the startup that we have. So yeah, I think it's a passion. I love it. I don't know if I'm a very good angel investor because I still haven't had my first exit, but a lot of the companies that I'm involved are doing well and are growing nicely and done their Series A's and starting to get a lot of traction. So
if you could go back to when you started Payu, knowing everything you know today, what advice would you give yourself?
Yeah, I think, well, first understand the market size. I think had we knowing that, we wouldn't have started it, which is a shame. But we didn't have any competitors. So understanding the market size means that you're getting into something that you won't have to wait 7 years for it to really get to something reasonable. So our growth would have been a lot faster had the market been ready. So that's an important one. Another thing is, don't underestimate the importance of human resources. I think not only from really good hiring, and there's always a saying of like hire slowly, fire fast. I still agree with that one, but also on the tools that you can put in to help as you grow. So when you have like a company of 30, 40 people, it's quite easy to control everything. It's quite easy to understand what's going on. But when you start growing to 500 to 1,000, it becomes very, very complicated. It's just a completely different thing. And if you don't understand to have the right tools, I mean, that's probably why I'm so passionate about Accendo, which is a human resource software as a service company that we set up to really help, like, not only set the right OKRs, but have better control on, you know, of what's going on, and finding the right profile, the right competencies to get into the right job. So like doing 360 reviews and understanding what strengths each one has makes a big difference. So summarizing, I think those two are important. And again, something I learned, but this is probably myself, was identifying where you as a person you're strong at and when you're weak at, and focusing more on where you're strong and complementing those weaknesses with people that have the right set of skills.
What's the next year look like for you and the business?
Well, I mean, we're super excited. We're 5 employees at the moment in Centeo. And I think, well, there's two things, right? Zinobe, I think it's going into a very interesting space, working with the government. Our SMB business is really growing dramatically in Colombia. Just closed a round of up to 30 million in debt to really expand it quite dramatically. So Zinobe is looking really good, but that's for Tarek and the team to keep on growing. And in Centeo, Matthew Meehan, which is the co-founder in this new venture that we're doing for Mexico, and myself, I think we're very excited about the prospects, about learning about the market and going in where, as I said before, when the market is probably a bit of gloom and doom, but we're very well capitalized and in a good position to take advantage. So it's hard to say, but we're very bullish.
It's great to hear that there's people who are bullish during a bad time in the economy, and I think tech is going to be the bullish sector going forward. So it's going to be fun to watch you continue to execute and build your next one. Thanks for taking the time to do the podcast. Really, really good, and I really appreciate it.
Thank you very much, Nathan. Best of luck with everything, and thanks for including me in your podcast.
Thanks again for listening to this episode of Crossing Borders with our guest, Martin Schrimpff. And thank you to Angel Andraca for producing this podcast. If you enjoyed this episode, please share with a friend and give us a rating on iTunes or wherever you listen to podcasts. It's the best way to share what's going on in Latin America's ecosystem.